Dylan Jovine claims to know the best investment of the decade and is pitching three stocks that he says will surge 42,000%. He's asking for nearly $2,500 to reveal these stock picks, but I have good news. I was able to figure out the stocks based on the clues he left, and I reveal them in this video for free. Drop a like and subscribe if you appreciate me saving you $2,500. Also, everything in this video is protected under fair use laws. I'm not disclosing any proprietary or paid information in this video. I am simply analyzing free and publicly available sales presentations and using the clues in these presentations to infer the stock. These sales presentations are not intended for paying customers and are freely distributed via email. There's a lot of stocks to uncover today, so we're just going to jump right into things. All the companies being pitched are offering weight loss drugs, and Jovine thinks this will be the biggest opportunity for investors for the next decade. Here's how Jovine describes the first company. Massive upside. The small biotech that could soar 42,000% if it isn't taken over first. Weight loss drugs are all about safety and effectiveness, and this small biotech has had smashing results on both fronts. Results for its weight loss drug were so promising, the company immediately became a top takeover target for a big pharma company looking to get into this gold mine. This company is Viking Therapeutics, and the ticker is VKTX. Viking Therapeutics is a clinical stage biopharmaceutical company focused on developing therapies for metabolic and endocrine disorders. The company's lead drug candidate, VK2809, is an oral thyroid hormone receptor agonist targeting conditions like non-alcoholic steatohepatitis and hypercholesterolemia. Viking is also advancing VK0214, a candidate for treating X-linked adrenoleukodystrophy. I personally think Viking Therapeutics is a buy. Here's what you should know before investing. First is cutting-edge obesity and metabolic disease pipeline. Viking Therapeutics is making waves with its innovative treatments for obesity and metabolic disorders, including VK2735, a dual agonist targeting GLP-1 and GIP receptors. This positions them in a hot market dominated by giants like Novo Nordisk and Eli Lilly. Second is strong clinical trial results. Early-stage trials for VK2735 have shown promising weight loss results, with patients experiencing significant reductions in body weight. If later-stage trials confirm these findings, Viking could become a major player in the multi-billion-dollar obesity drug market. Third is undervalued compared to peers. Despite its potential, Viking's market cap is still relatively small compared to industry leaders. This could mean significant upside if their pipeline succeeds, making it a potential hidden gem for growth investors. Fourth is high-risk, high-reward play. Viking is still in the clinical stage, meaning there's no revenue yet and plenty of risks. However, for investors willing to take on risk, the payoff could be massive if their drugs gain FDA approval. Fifth is insider confidence and institutional interest. Insider buying and growing institutional ownership suggest that those closest to the company believe in its long-term potential. This is often a bullish signal for investors. Sixth is competition is fierce. While Viking has potential, they're up against well-established players with deep pockets. Execution and differentiation will be key to their success. Bottom line is, Viking Therapeutics is a speculative but exciting play in the booming obesity and metabolic disease space. If you're comfortable with risk and believe in their pipeline, it might be worth a small position. But as always, do your own research and consider your risk tolerance. I'm going to reveal my guess for the rest of the stocks in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out Alpha Picks. I reviewed over 100 stock picking services, and Alpha Picks performs the best, and actually beats the market easily. If you click the link in the description, you get $50 off Alpha Picks. So go ahead and click that link and take advantage of this amazing deal. Here's how Jovine describes the second stock. $20 billion baby, Morgan Stanley's #1 weight loss drug stock. Our second weight loss drug company is on the verge of releasing a drug expected to be a blockbuster. Morgan Stanley predicts this drug will do at least $21 billion in sales, making it even bigger than Keytruda, the biggest selling drug in history. The Wall Street Journal thinks their weight loss drug could hit $25 billion a year in sales. Regardless of who's right, investors will be big winners with this pick. This stock is Eli Lilly, and the ticker is LLY. Eli Lilly and Company is a global pharmaceutical giant focused on discovering, developing, and manufacturing innovative medicines. The company is best known for its treatments in areas like diabetes, oncology, immunology, and neuroscience. Its blockbuster drugs include Trulicity and Mounjaro for diabetes, Verzenio for breast cancer, Zepbound for obesity, and Emgality for migraines. Eli Lilly is also making significant advancements in Alzheimer's disease with its candidate donanemab, and it continues to expand its portfolio with a strong pipeline of biologics and small molecules. I personally think Eli Lilly is a hold, and here's what you need to know about this company. First is blockbuster drugs driving growth. Eli Lilly's portfolio includes game-changing drugs like Mounjaro for diabetes and Zepbound for obesity, which are dominating the market. With obesity and diabetes on the rise globally, these drugs are set to generate billions in revenue for years to come. Second is obesity market, a $100 billion opportunity. The obesity drug market is exploding, and Eli Lilly is a key player with its GLP-1 drugs. Analysts predict this market could hit $100 billion by 2030, and Lilly is well positioned to capture a massive share. Third is Alzheimer's breakthrough on the horizon. Eli Lilly's donanemab, an experimental Alzheimer's treatment, has shown promising results in trials. If approved, it could be a multi-billion-dollar drug and a major win for patients and investors alike. Fourth is strong financials and dividend growth. Eli Lilly isn't just about innovation, it's a financially solid company. With consistent revenue growth, strong margins, and a reliable dividend, it's a great pick for both growth and income investors. Fifth is global healthcare trends favor Lilly. Aging populations, rising chronic diseases, and increased healthcare spending worldwide are tailwinds for Eli Lilly. The company's focus on high-demand areas like diabetes, obesity, and Alzheimer's makes it a long-term winner. Sixth is R&D powerhouse. Eli Lilly invests billions annually in R&D, ensuring a robust pipeline of new drugs. This commitment to innovation keeps them ahead of competitors and drives future growth. Seventh is valuation. Not cheap, but worth it. Yes, Eli Lilly's stock isn't cheap, trading at a premium. But with its growth potential, blockbuster drugs, and market leadership, it's a classic case of paying for quality. Eli Lilly is a long-term growth story with massive potential. If you already own it, hold tight. If you don't, consider adding it on dips. This is a stock you'll want to own for the next decade. Here's how Jovine describes the last stock: the weight loss drug taking Hollywood by storm. The third stock in our special report has already established itself with one of the richest groups around, Hollywood. That's given this company a head start, allowing it to rack up an estimated $2.3 billion in sales last year alone. The company being pitched here is Novo Nordisk, and the ticker is NVO. Novo Nordisk is a global healthcare company headquartered in Denmark, specializing in treatments for diabetes, obesity, and rare blood and endocrine disorders. The company is best known for its innovative diabetes care products, including Ozempic, Rybelsus, and Victoza, as well as its groundbreaking obesity drug, Wegovy. Novo Nordisk is a leader in the development of GLP-1 receptor agonists and insulin therapies, with a strong focus on addressing the growing prevalence of metabolic disorders. This is another stock I rate a hold for similar reasons as Eli Lilly. Here's what to know about NVO. First is revenue on fire, but valuation is high. The company is posting record-breaking revenue and earnings driven by strong sales of GLP-1 drugs. However, the stock is trading at a premium valuation, which means much of the growth is already priced in. Third is global dominance in a niche market. Novo Nordisk controls a massive share of the diabetes and obesity drug market, giving it a competitive moat. Their innovation pipeline keeps them ahead of rivals, but competition is heating up. Fourth is long-term growth, but short-term risks. While the long-term outlook is strong, short-term risks like pricing pressure, regulatory scrutiny, and supply chain challenges could weigh on the stock. Fifth is innovation pipeline. The future looks bright. Novo Nordisk is investing heavily in R&D, with new treatments for obesity, diabetes, and even cardiovascular diseases in the works. This keeps them relevant, but it's a long game. Fifth is market volatility could create buying opportunities. The stock has had a massive run-up, and any market pullback or sector rotation could bring it down to more attractive levels. That's why it's a hold for now. Wait for a better entry point. And make sure to click the link in the description to check out Alpha Picks. This is the best stock picking service, and clicking the link saves you $50 on this awesome service. So go ahead and check out Alpha Picks now and put yourself in the best position to win with stocks.